Just text her. She's still up.
Okay. We are live, Diesel.
So, guys, what's up?
What's the formal?
Hey, what's going on? Where are we live on? YouTube, IG?
My IG and your YouTube.
So on your IG. So not on my IG?
No, because you don't do that anymore. You only do YouTube now.
Okay, so you're on your IG, meaning your personal IG.
Yep.
Hi, hello. Hi, I'm Hannah's friend. Nice to meet you, everybody.
I'm going to do both bells.
Yes. That'd be funny if you had like more followers on your personal IG.
Stop.
No.
Yo. Hello, everybody. Okay, so let's get started. Pascal clearly is always on his phone because he's busy. I don't take it personal.
That's what she says as she cries in the corner. Let's do this. Yo.
Okay, so welcome to Corcus Live. Here we will talk about real estate and finances and investment. So that is your specialty. Pascal, can you please tell everyone your experience with that?
Sure. I literally started working when I was 8. Very illegal, but I did it anyway. So I paid for my comic books and baseball cards. Started investing in like basic small trading when I was like 11. Started doing stocks when I was like 14. Started learning about real estate when I was 14. I was like thinking that was like the coolest thing ever. 19. Fast forward 19. Buy my first duplex. Fast forward 23 on 23 units. Fast forward, I'm 36 now. I have an accounting firm, insurance agency, mortgage company, property management company, and construction company. We own lots of properties in the Tampa Bay market. And I basically spent my childhood learning everything I could about finance and investing. So while everyone was like out playing basketball, doing whatever morning to night, I was learning investing, studying morning to night. So that's like my thing. That's my vibe. I love it. And I do that 24/7 now. So whatever question you have, I'm more than happy to answer it for you and let you know what's currently happening in the market today.
Okay. And before we jump into that, was there anything new in regards to your real estate this week?
Interest rates are going insane, like berserk, straight berserk. And what you're seeing on the 1 to 4 family space, because I own a mortgage company, right? So the 1 to 4 family space, Fannie, Freddie, those are government-backed loans. So the government provides stability in the market, which is good for the consumer. But if you are a investor and you're getting a non-QM loan, non-qualified mortgage, not government-backed mortgage, those berserk. Like they're already in the 6s now for a 30-year loan. And they're normally 1.5% upfront. That means 1.5% upfront. And also normally 3 to 5 year prepay penalty if you do that. So it's really like insane type of stuff right now in the market. So you really have to be aggressive. You have to be like on top of it, focused, because I think the biggest risk we're going to see if you have a quality property, quality area, I don't really foresee you're going to have too much downside in the next year to 2, but where you're going to see issues is interest rate risk. Lots of interest rate risk.
So you said government qualified loans. So are you saying for the average home buyer or someone who's interested in buying a home, and it's like what's that government loan?
Fannie, Freddie.
Yeah. What's the other one?
Fannie Mae and Freddie Mac.
Yeah. They those are not really high interest rates right now.
So they went up, but not like the investment market, not like the non-QM market. The non-QM market's going like berserk, and it's going to go up again Monday.
Do you think the higher they put the interest rates, will definitely go into recession?
So there is a correlation between housing prices and how the market does with interest rates. But currently, people have money, and they want to spend it, and I believe people are still willing to pay high interest and pay by product.
Okay.
So I don't see currently at even at 6%, I don't see the market slowing, because our demand is so high and the supply is so low. So people are still willing to step in.
Okay. My next question then, jumping into tax season. I know it's tax season right now, and businesses, their taxes are due the 15th.
Correct.
And that is just submitting it, not necessarily paying off what's owed.
So there's 1065s, which is partnership tax return, and 1120Ss are due by March 15th. Those tax returns are passed through entities. They do not pay a tax. There isn't a tax due. You owe the tax on your personal return for those tax returns. So on your personal return, the K1 from the business flows through to the personal return, your 1040, and then you'd pay your tax, which your 1040s are due April 15th. So yes, they are due now. If you are not prepared to get them submitted by now, you would file an extension, and it would give you to March 15th on the business returns.
Mm-hmm.
And for the 1120S, which is a business, the 1120C business return, those are due April 15th. You pay tax on that business return. Or your 1040 is also due April 15th. That is where you pay tax on your personal return or on your personal return for your flow through entities, meaning profit I made on my 1065, profit I made on my 1120S, that flows into your personal 1040. And that's where you pay your tax.
This might sound like a silly question, but for small business owners, I mean, I am aware of LLCs. Does that fall under what? Not the 1120S, because that's S Corp, right?
So you bring up a very good point, and I'm telling you, it doesn't matter how educated the investor is. This is still so common. I get this so often.
Okay.
1065, 1120S, 1120 has nothing to do with your LLC.
Okay.
Those numbers I referenced, those are how you are taxed. LLC, Inc., LLP, those are how you're treated legally in a lawsuit. So you can be an LLC and be a 1065. You can be an LLC and be an 1120S. You can be an LLC and be an 1120. You can be an LLC and be a Schedule C on your 1040. That is just how you're going to be treated legally. That has nothing to do with how you are taxed. Remember, our government, the legality that we have, that is the legal aspect, is separate from the IRS. The IRS is not technically government, right? The IRS, which if you don't know this, is quasi-governmental. This is actually is not really part of the government. People think it's part of the government. It's not actually part of the government. Same thing, the Federal Reserve. The Federal Reserve that makes our money is not federal. And there they have no reserves. They are actually a group of private banks. So what people don't understand is that we have all of these people in the shadows that tax us and give us this fake funny money, and we think it's all government. It's
funny
not.
Money. Sorry, that was
It's legit funny. It's not real. If you look at your money, I know this is a tangent, but people don't look at this. In 1920s, what it said on our money was different than what it said in the 1950s. It's different than what it says in the 1980s. I'm going to zoom this in real quick so you can see this right here. Right here it says,
and over here
this,
for the Instagram followers.
Yeah, and I'll show them to Instagram. So this note is legal tender for all debts, public and private. So if you read the fine print, Hannah, you hold this up to the Instagram people, and then I'll explain what it says. So it says, in the fine print, read your money. It says this note is used for all debts, public and private.
Okay, I do my best.
What does the word note mean? The word note means loan. So what did we just say? If we replace the word note for loan, this says this note is legal tender for all debts, public and private. So if we believe, if you follow what I'm saying, we just determined that this $20 bill is a loan. So if all the cash in your checking account, my savings account, all of our currency is a loan, That means all loans have interest that we pay. How do we pay that interest? The way we pay the interest on our cash and our checking account is called inflation. Instead of us paying money to the government, what they do is they print more money and make our money worth less. It's not that the cost of cocoa, the cost of the chocolate bar went up because chocolate is so valuable.
Or
coffee beans. It's because our dollar is worth less that people will say, now you have to give me more dollars for the same amount of coffee because the government devaluated the currency. It's a hidden tax. The crazy part is this.
I wonder if people can hear me drinking. Sorry.
What's who I got to work with? No, I'm just joking. So if this is a loan and inflation is the interest we pay on the money, every loan has a collateral. What is our collateral on this loan?
Taxes?
Collateral.
Oh.
Collateral, right? Collateral on a home mortgage is your house.
Oh.
What's the collateral on this loan?
Gold?
The Federal Reserve no longer has any gold. That's out. We are not backed by gold anymore.
IOUs?
It's IOUs by the government, but who's the real collateral?
Me specifically, I'm just joking.
You're the collateral. Because when the Chinese come and say, hey, you owe us all this money, pay up. And the Federal Reserve says, and the government says, no.
Why do you say the Chinese?
The Chinese we owe the Chinese more. The biggest lender, the Chinese lends to us money. They actually fund most of our currency. So I'm going to step back and explain what that means later. But this money here, the Chinese give us most of it. Because what we do is we buy their stuff. We buy their cheap stuff. And when we do that, they have a whole bunch of cash. And what they do is they end up just buying T-bills back with that cash.
What is it?
T-bills. And I'll explain that later too. But the point is this. The Chinese are going to say pay up. And we're going to say no. So they're going to say, okay, you know what? The old school way, what would you do? Invade the country. So the collateral to the money is us. The American citizens are the slave for the collateral for this loan. So when people keep on taking more free money from the government, they're like, yay, free money. No. What you did is you deepened your slavery to the government, and that you'll be a slave to whoever takes over next. So that is why cash is trash.
Hashtag cash is trash.
Hashtag cash is trash. You want to trade your money for assets. So this is not money. Just so you know, people say this is money. Look at all the money I have. This is not money. This is called a currency. You're trading it. It's a flow of currency. It's a trade.
A medium of exchange.
Exactly. So money has an intrinsic value, right? So we're talking about what real money is: gold, silver, oil,
nickel.
That
skyrocketed.
Yep. Anything that's tangible asset is going to go through the roof. Real estate. So the thing is, we don't see them as money because it's very hard to transfer. There's very low liquidity, but there is a value for it. So now, what is a T-bill, right? So every time they make a note and they put this out, the government actually has to create a counter on the other side of the counting. There's these cash that goes out to the market, but then there's T-bills that are sold to the market. So every time they sell this T-bill, sell out this new loan, they put out the cash. And when they have to make the payment on these loans, how are they going to pay it? They devalue the currency to create more cash to pay it. So they're basically the biggest Ponzi scheme in existence is the fiat currency that not just America is doing, but the global economy, the global world is doing, right? Any first world country has a fiat-based currency. So they're all in this game. And what you don't notice is that because all of these currencies are jumping out of a plane and all of these currencies are devaluing, they're falling. You don't realize it because everyone's in a parachute and you're all falling together. And American dollar happens to be falling slower than everybody else. So we look like we're going up when in reality, everybody's falling. That, when you understand what I just said, and I know I dumped like 20 years of knowledge into your brain, and you're like, I don't know what the freak this guy's talking about. He has taken some type of.
You can always rewatch this guys.
Did you see
some notes because
this
it was
guy's
really good.
He must have taken something because he is not talking English right now. So what I'm telling you is, when you understand that, your mind is blown. Nothing will be the same again, and then that is why, and that's why the Bitcoin crew, like they get orange pilled. They believe that that's going to be the saviors, the Bitcoin, because it is they're trying to be a digital gold standard. In theory, that's nice, and I think why people have such a heart for Bitcoin is because when they discovered Bitcoin, they also discovered the fiat issue, and they're like, oh, thank you for giving me the red pill. Thank you for opening up my eyes that I'm basically just a slave. And now I have devotion to you, Bitcoin, where it's also not a savior. It is a good transition. It is a good offering. And I do own Bitcoin, but it is not a savior, right? This thing is not a savior. If we all said we're going to have a gold standard, period, end of point, we're not going to budge, it would also save. But it's not, at the end of the day, the dollar that's going to save you. It's not gold that's going to save you. It's not Bitcoin that's going to save you. It is individual people educating themselves on their finances and not letting these governments or these companies manipulate you and use you as cattle or as trading chips.
So going back now with all of that education on finances, how that correlates to taxes, then you kind of need to know how to use your taxes as a means to saving your money or optimizing your money so that you're not a slave to this currency,
to the system.
And the system.
Yeah. So just so you understand, again, the Federal Reserve is not federal. The IRS is not truly a part of the government. The IRS is set up so it can make sure we pay our taxes in, so it can pay for all the loans the government took. So what does that mean? You are a slave. Like, it's pretty black and white, because how are they paying the bill? Through the IRS collection. Now, is it enough money to pay? We're at the point that it's almost basically not even enough money to pay for the interest we owe. It's actually not enough money to pay for the interest. It's not enough money to pay for the interest we owe. It's not enough money to cover our actual costs to run the country. We are so far in a deficit that we're like extreme negative.
That's what I keep hearing from the economic chambers, that it's just, we're so deep in the pit. Like,
it's been that way for a while, right? Like, since when I learned this, when I started studying, because I started studying banking so I took banking in college because I understood certain factors. So I was like, okay, let me understand it deeper. How's the system work? I started working at the bank when I was 18, took banking in college. I got a finance degree, minor in mathematics. I got a second degree in accounting, minor in economics and international business. So I took every single class you could take in the business sector. So I love finance. I love the modern economy system. At the same time, I've studied it enough and I know it enough that I also know that there's parts that are truly ugly, and it's built to make some succeed and others fail. And you better be conscious. And if you are conscious, you're going to be successful. If you're not, sorry, it's tough.
And you can't get mad at people who do want to get the education, who do want to learn for themselves and put in the work to ask questions from those that are experienced. Not just watching YouTube videos, which those are helpful. That's a great start to make yourself aware. But then going and finding a tax expert, going and finding an accountant who knows how to manage your funds, and then not being afraid to ask questions and not being afraid to get that help. Like, you can't get mad for those individuals that did go that route versus you that's just like, oh, this is what I have and this is what I'm dealt with. Like, it's your responsibility, one, as a personal human being, and then also if you have kids, that's your legacy. And if the crap's hitting the fan right now, I can't imagine what our kids are going to go through. Like, it's my job as a parent to learn and be aware, and so I could teach my kids.
That's smart, because the biggest issue that I find personally is when people are not holding themselves accountable and saying the government needs to fix this and this so-and-so needs to fix that. The problem is the government is the problem. We have people in power that on both sides of the aisle that do not understand finance, or they do know finance, but they don't care because they're willing to take today's benefit and let tomorrow suffer. Because they're like, oh, it's not going to be my problem. I'll be gone by then. And then what they do is they blame each side of the aisle to fight with each other, to make them busy fighting with each other, instead of the real problem is them. Because the whole rich and poor thing, it's not the rich or the poor's fault, right? Some of the rich, not all of them, but some of the rich figured out how the game works and they're playing the game. And some of the poor don't know how the game works, so they're not being able to benefit from the game. So the problem is not so much the rich or the poor. It's the problem is the people that set up the game. The game that was set up isn't
fair.
It isn't so fair. It isn't fair, and it isn't, I would say, the best game. Now, what I do say about Bitcoin is Bitcoin helps to make the game more fair. Now, again, they could do the same thing with the gold standard. They can say, okay, we have a gold standard and we're fixed to it and we're not moving.
You're talking about the government being like, let's go back to the gold standard. Let's attach our medium of exchange, this cash, to the gold.
Correct. And then
is that even possible right now?
It is, but it would be on a very devalued level, right? So it would be like every $100 is like 1/10 of an ounce or something like that, right? Like,
I mean, is there even gold to be mined?
There is gold to be mined, and I think a lot of the reasons that people don't say is that the reason SpaceX and Blue Origins and all this, they're like, oh, the Mars. I think they're going to go out in space and they're going to be mining asteroids in space, and then taking all of the rare minerals from that, and all those rare minerals they're going to be bringing back to Earth, and they're going to make a lot of money from that. I think that's really their game plan. And as they make a crazy amount of profit, then they will work on using those profits to go to Mars. But I think that's really going to be their game plan.
Can I get in on it?
Can I get with
Elon Musk?
How can I use my tax refund to invest with Elon Musk?
That's going to be a question. Okay, so let's get to taxes. So we went off on an economic education, which was awesome for those, even me, that needs to always constantly hear this. Again, don't be afraid to ask stupid questions, because no questions are stupid. So ask away. And speaking of questions, we do have something here. Jose Delgado says, oh, your guy Daniel did a great job with my taxes. Thanks.
Awesome.
If you guys didn't know, Pascal also owns his own
accounting firm.
There you go. So he does
we
taxes.
Do taxes, bookkeeping, and payroll for corporations and individuals. We specialize in real estate investors because we're able to get you a lot of tax credits. We're able to get you these actually money back. Most of the time we get people a lot of money back where they thought they would owe money. And then we also have the investment firm that actually specialize in tax smart investing. So as you make an investment, a lot of people can get a tax credit from that investment and even reduce their income. So instead of sending money to Uncle Sam, you're investing money with my company, and that will actually get you the investment and a tax write-off. So it's a double win.
Okay. And with that, there is a question here. Is there a minimum? Oh, that's not it. Here we go. After acquiring how many properties do you recommend I should do my taxes done professionally?
So there's a difference between getting your taxes done professionally and getting an advisor, right? So
you know what? Let me jump in actually really quick. Who benefits from getting your taxes done professionally?
What do you mean, who benefits?
As in like a regular W-2 worker who perhaps has no investment, not even a Roth, and they're just starting out in the workplace. Or they have those opportunities, invest in a Roth in their company, et cetera, which you can talk about later. But they're just like, is it easier for them to or better for them to just submit their basic W-2s to TurboTax, or should they go to a firm?
So
that's costly.
does cost money to get your tax prepared by a professional. If it is a bad professional, it makes you money if you get to a good professional. If you have a good tax advisor, you have a good professional doing your taxes, you don't spend money. That person pays for themselves. I had a woman come to me to do her taxes. She was paying like $1,000 with her old, $1,000, maybe $2,000 with her old accountant to do her taxes. We charged, I think, $5,000. Now with her old accountant, she used to pay, I think, a total of $80,000 in income tax. When she had it done by me, she got $20,000 refund. So how much did she pay me?
15,000.
She didn't.
I see what you mean. Because instead of owing 80,000, she got 20,000 back. So in reality,
she didn't pay me. I paid myself. I earned all that money, and I could have probably charged her $10,000, and it still would have been an amazing deal. So the point is, if you have someone smart on your team, you got to remember, some people will see that tax preparer, that company is an expense. They're taking money from me. That's a bad mindset. That means that person has a poor mindset. I don't even want to work with that person. Don't call me. Now, if you think, wow, there's so much money available out there. FYI, the government's printing a stupid amount every year. So there's new money being made every day. There's enough money to go around. But the mindset of there isn't is unhealthy. So now if they think, there's enough money to go around, right? I'm gonna hire this person because they're gonna make me money. They're gonna save me on taxes. They're gonna advise me to change the way I'm thinking, change the way I'm investing. They're gonna pivot me so I can move into an angle to grow. Now, that person didn't cost you anything. They made you money. That is worth something, right? You get a good accountant, you're making 5 to 10 times on whatever you spent with them.
Yeah.
I had a guy call me, spent $1,000 for a 1-hour call. He's like, oh, my accountant said this property is a bad idea. Gave me the numbers. I'm like, wait, he didn't even count for this. He's like, stupid, just straight stupid is the answer again. Like, I can't say again, I'm sorry. He just, the guy doesn't know what he's talking about, right? Like
say that. Let's be gentle.
Let's be nice. He's like, doesn't know what he's talking about, right? So, but my client almost didn't buy this property. And long story short, he bought the property. It's a year later. The guy made like almost $200,000 on that move.
On that property that he almost didn't buy.
Yeah. On that one move. There was another time I talked to him, another property, almost didn't buy it because of his accountant. $700,000 he made on that property. He bought the property for like $450,000. It's worth like over $1.2 million. He didn't spend a ton of money on that property either. $1,000 made the dude, from my advice, $800,000. So okay, so how much did it really cost him? Anything? No, he's better off.
So his accountant also does his taxes, is what you're saying, and then
his accountant does his taxes, and he called him for financial advice.
And then called
on the numbers, and then he called me because he follows me on Instagram. He guy owns like 50, 60 apartments already.
Okay.
And he's like, hey, I wanted to get it to the next level because my books are crap. Everything I'm doing is not proper. I need to get it set up. So from there, he also hired me for consulting. There's a difference between tax preparation and tax consulting. There's a difference between business consulting. Those are not the same thing. So do not think your tax preparer can give you tax consulting that can give you business advice.
See, that's good.
They're different.
I hear different from other people, and they're like, oh, I don't need to reach out to this person because my tax preparer already tells me what I should do or should not do in regards to where to put my money, allocate my funds next year so that I can maximize on this savings, on taxes,
It's like, if they were so smart, why are they working and only making like 80 grand a year, 100 grand a year, 200 grand, 500 grand a year? They wouldn't be. Right? They wouldn't be. If they were that smart and knew. I love taxes. Like, okay, I like taxes too, but I don't do them anymore. I advise on them.
Yeah.
Right? Okay, you call me. I will tell you what you need to do. I'll tell you what's going to likely happen. But they don't know about real estate investing. I have a real estate investing firm. and they have an accounting firm. That's how I understand the two work together.
Yeah.
So if they're not going to have the answer, like again, and I don't expect them to, but you shouldn't be asking the wrong person that advice. Is your accountant a multi-millionaire in real estate? If the answer is no, you're asking the wrong person.
About real estate.
Yes, you should
Gotcha.
talk to an accounting firm that owns millions and millions of dollars in real estate. Otherwise, you're getting advice from someone that isn't where you want to be and doesn't have a track record of taking anyone there. Next question, you'd say, okay, I get it, right? Michael Phelps can swim way better than his coach ever did. His coach never even came close to him, right? But he's still a good coach. So you don't have to go to a coach that is, you don't go to a coach that's, you don't go to your tax preparer to technically be the best in the business. But what you do need to see is, do they coach the best in the business? So does your tax preparer, does your advisor coach other people that are super successful and have gone to where you want to go?
Question: how do you know that?
Well, ask them.
Oh, okay.
Literally, how many clients do you have that you want to own 100 units? You want to own 20 units? How many clients have you helped go from where I am to 20 units? That you can say you helped them get there. If they can't say 10, 20, 30, 50, 100, how many people have you taken from 20 to 100 units? 100 to 500. If they can't say that, then why are you asking their advice? They've never done it before. What are you, a miracle that they're going to do that for you? Like, so it's hard when you're going to be asking. It's not fair to ask them to do something they've never done before. They're going to try their best, but they're not really going to be the best at it.
So with him, he's asking, like, after acquiring so many properties, do you recommend, if I'm assuming they don't get their taxes done professionally?
So if you want to grow, you get a coach that's going to help you grow to where you want to go. That's it. So the question is, when do you get it? The real question is, when do you want to get there? If you want to get there fast, then you should have gotten them a few years ago. If you want to get them soon, you better get a professional now. Because what's keeping you from going to the next level is the fact that you don't know what you need to know. You don't even know what questions to ask. So the person that's gone there before, the person that's coached many people to say, this is the direction you go to, this is the path you have to take to get to where you want to go, that person is going to be able to tell you, no, that move is not right. You need to make this move. Excuse me. And be able to set you on the path for success.
So correlating to all of that, it's just, you're saying, if we want to get our taxes done, you want to go towards somebody that is in the field of what you're doing almost, or that handles those types of businesses.
That has the expertise. Yes, that has the expertise that says, I know what it takes to help someone who has 100 units. This is how you go about it. They can give you the path.
Or a business owner that's not real estate. Like, it could be just a regular LLC, or sorry, not LLC, whatever, businesses. Like, you want to go to a tax preparer that actually works with businesses.
Yeah, so you want to go
businesses.
Because not every CPA is the same. It's like going to a doctor.
That actually makes sense.
You go to a doctor and you go to your general practitioner, right? And you say, my eye is bothering me. They're going to be like, okay, go see an eye doctor. That's it. Here's your prescription. Yeah. So,
or an ophthalmologist.
Yes. So you get what I'm saying, right? You're not going to go to a doctor and say, fix my eyes. They're not going to do it. They're going to refer you to a specialist. So the same thing is, you can't just go to a general. I have CPAs that come to me and do to get their taxes done, because their specialty is audit. It has nothing to do with tax. And if you do tax, maybe your specialty is personal. Your specialty may be partnerships.
Personal, as in like just an individual person, or families?
Like both. It could be, that could be their specialty, right? So when you're looking at that, remember, people at H&R Block charge $200 to like $800 for a tax return, and none of them are usually have any type of degree.
I know. I actually know you can just apply, and then they train you, and then they train you how to fill in the blanks.
They told you how to fill out an application. So for $15 an hour, you can fill out an application at H&R Block, and you can call yourself a tax preparer, tax expert. And then for every, I think like whatever they charged on top of that, they charge $400. I think you get like 5 to 10% extra on for your hour. So the hour, you got $15 an hour. You did a $400 tax return. You got another $20. You made $35 for that hour. Cool. What experience do you have? Nothing. I learned it 3 weeks ago. But then again, it's like, it's not, you need to pay a person that knows what they're doing, because that person is going to be able to guide you and educate you. It's the education you need to be aiming for, learning what you don't know, because educating yourself is the number one thing that you need to do, because it's the number one return on your investment.
We had a question on Instagram. They asked, can a business get fined if they're late on sending a W-2 to an employee?
Yes.
There's your answer.
Yes. And also you can be fined for not sending 1099s.
Yes.
To the subs.
That I know for sure.
Yeah.
Not that that's happened.
They're due by January.
With Favorites Entertainment.
Never.
But
never.
I remember my husband, who's a small business owner, who has to send 1099s. He's always like, I need to get this done before, that stuff. But I'm like, oh, okay, I'll watch the kids. So with taxes for small business owners, how can people maximize with tax write-offs?
So there's a lot of ways you need to focus on getting tax write-offs that do not lower your income in a negative way. So what does that mean? If you lower your income in a negative way, it will be very difficult for you to get business loans, personal loans, car loans, home loans. I have a lot of business owners that's like, oh, I make a lot of money, but I can't get a loan. And then I look at their taxes and I'm like, well, the way you're preparing your taxes makes it look like you're poor, and you can't get a loan if you're poor. So, but look at all the cash that I have, and look at this and this and that. And I'm like,
yeah, the income to debt ratio.
That's the income ratio. Yeah. So remember, the taxes are done by a quasi-governmental agency. Loans are provided by a quasi-governmental agency. They're gonna look at each other and they're gonna say, does this make sense? So you have to make sure that you're filing your taxes properly to get those low interest rate loans or lower interest rate loans. Now, you can go get a non-QM, non-qualified loan, which doesn't have government backing, and get it without your tax return looking good, but you're going to pay higher interest. So people are like, well, I don't want to make my tax return look good, and I also don't want to pay high interest. So it's like, okay, well, get a professional that can help you with both. I have an accounting firm and I have a mortgage company, because if you don't do one right, the taxes, you're going to end up not being able to get the good loans. So how you do that is basically making sure that you're documenting everything properly. Your tax professional can help you do that, and making sure you're filing everything properly. There's a lot of ways you can pay very little tax. Thank God, I've never paid more than $1,000 in income tax ever. And that's not because I don't make money. That's because I use every single rule in the book. Now, in your tax book, only 0.5% of the tax code talks about what you owe. 99.5% of it talks about discounts and credits. That must mean there's a lot available. So if you have a good, educated tax professional, they can show you all the different ones available. There's a ton of investments out there that you can invest your money, make a great return, and get a tax write-off. So the tax code was written to incentivize the citizens of a country. So this way, if Hannah provides housing, the government doesn't have to provide as much housing. And because of that, she's going to get some type of credits, discounts, deductions. If Hannah provides jobs, because the government doesn't want to provide jobs, it doesn't want to have to pay all of this unemployment. If Hannah provides jobs, she'll get credits and discounts. She'll get incentives. What the research shows is that any tax credit or incentive that the IRS puts out has the highest ROI of any government-sponsored program. So when they're saying, okay, let's spend $1 million to provide low-income housing, and the government does it, the return on that is like low. But when government offers tax incentives to offer low-income housing, when the IRS has calculated what is the return on that, the return on that is very high. So it is the biggest benefit that the government gets from doing all of these tax credits and benefits, credits and deductions. Same thing with green energy. They wanted green energy. What did they do? Offer a ton of discounts, credits, deductions. So what's so funny about green energy?
Because there's this whole thing about the green energy. Like a few days before the Russian-Ukraine crisis happened, Biden didn't want to continue with that pipeline because they're all for the green energy bill or whatever it is. And then two days later, the Russian, Ukraine crisis war happened, and then now gas prices are so high, and we're having to depend on other countries instead of using our own pipeline.
Yeah, and the thing is, what's happening with American gas prices is 100% America's fault. It has nothing to do with Ukraine. People don't know, or Russia, or anything outside of our own country. We caused this problem, 100%. We made so many bad decisions that has caused the price to go this high. So it's our own fault.
So going back to taxes, with the write-offs, I know I have some friends who just want to start an LLC just so they can write stuff off.
You want to say their names so the IRS can come to their house?
Well, I mean, here and there they'll
John Doe at 123 Main Street.
Like, for instance, I mean, technically you can buy a utility vehicle, a car, remember, with a certain amount of weight and have that be a tax write-off.
It's a write-off. What's a write-off? It's a write-off. Who said it's a write-off? What the write-off people? Huh? I love that skit. It's so good.
It's from Schitt's Creek.
Up Schitt's Creek, yeah. So, first of all, not everything is a write-off.
Thank you.
It can be a write-off, right? It is the purpose. The purpose of the thing will determine if it is or isn't. This laptop can and cannot be a write-off, depending on what is the purpose of the item, right? It's that simple. So that plane, when it was just decor, was not a write-off. But I used it as decor for my office. It's a write-off.
If you work from home and you have your own business, you legitimately have your own business and you do your business at your house, your office space is a write-off.
So if you work from home for yourself, as for your own company, it can be. But if you work for a company working from home, it is not. So now, can you use your office as a write-off, like business use of home? You could. You double your odds of it getting audited if you do. So I run the numbers to figure out if you do take it or don't take it, and then I tell my clients this is how much you're going to save on taxes. Historically speaking, we always decline to take that credit. It was only like $500 or maybe $1,000. Where there's a bunch of other credits and discounts available that we just chose not to take that because they didn't want to double their probability of getting audited.
I see.
So they're like, all right, let's figure a different way out that we can get tax savings that does not increase the probability of getting audited.
Interesting.
And again, don't think, oh, you're avoiding an audit because you did something wrong. No, you're avoiding an audit because you don't have 10 to 40 to 200 hours to spend in an audit for no reason and paying tax professionals and paying lawyers and doing all of this time and energy that should be avoided, right? We don't want to ever do work that's not going to compensate us for that work. So if we can just avoid the problem altogether, you should do it,
So as a small business owner, what is something that you've seen? I'm sure you've done other small businesses taxes. What is something that you've seen that you've you found a credit or a deduction for that they've used?
That's like vague. So I've done other small business. FYI, I've done Home Depot's taxes. I've done Rothschild Family Trust taxes. I've done big ones and I've done small ones. Like we've done it all. I worked at PricewaterhouseCoopers, and so I've done a lot of
Big accounts.
Big accounts, yeah. So,
And advice to a small business owner.
a different write-off. Obviously, if you buy a computer, you can write it off. You buy a cell phone, you buy a car. Just remember, one of the biggest issues that people do is they write it off as an expense.
Oh.
That I wouldn't do that, because you can do it, but it's not advisable. One, it's not usually accurate to how it's supposed to be done. Two, it's going to hurt your odds of being able to get a loan. So instead of, say, buying a cell phone, it's $1,000 and you write it off as an expense, as an expense section of your tax return. That $1,000 is going to be an impact to the ability that you're going to be able to qualify for a loan. Instead, you add the cell phone as an asset, and then you depreciate the asset over time. You can also elect to bonus depreciate all in 1 year. So when you then have that line item into your depreciation section of your tax return, so at the end of the day, you still have the same tax bill, you have the same total expense, but if you depreciate the cell phone, what the bank will do is they add back depreciation when they calculate ability to pay. So you can still qualify for a loan and still get the tax savings by doing that format compared to the cheap way of doing an expense and then hurting yourself.
So real quick, just a disclaimer, this is not a tax or financial advice per se. This is just Pascal sharing information. Again, reach out to your professional tax advisor, financial advisor for legal purposes. Thank you. And going with the small businesses, I remember you talking about, for instance, a construction company basically look at their taxes and it looks like they didn't make any income from their business because they did other things on the side that was shady, like in a sense where it made them look poor, so they couldn't really get, or their business looked unsuccessful, so they couldn't really get a business loan or to expand and purchase a car, a vehicle for their business.
Yeah, there's different people that I've reviewed taxes for and that I didn't take on as clients because they didn't want to listen to do it the right way. They just wanted to do it the wrong way and they wanted me to do it the wrong way. And I'm like, look, I'll show you how to save money on your taxes and do it legally. If they don't want to listen, then I can't help. I can't help anyone that doesn't want to be helped. And at that time, I don't want to work with the person because that means they don't want to become better.
Is that what you mean with sometimes it's just better not to do so many write-offs?
No, it's not that you shouldn't do so many write-offs. Is that you should do the write-offs properly.
Okay.
And you should do them in accordance to the rules. So if you're not showing the cash you make, that's dumb. There's enough ways where you can get write-offs to show the cash you make. Because then this is what happens. They don't show the cash, right? It's like, I don't want to pay tax. And then they buy stuff for the business for cash. And then they don't depreciate the asset. That's dumb. You should have showed the cash and then put the item on as an asset and depreciated it. So then you would have showed the income and not had to pay any of the taxes, and it would have been easy for you to get a loan.
When you say, when you're saying depreciating, as in taking it as like a loss, and so that right away is already a tax.
Not a loss, because a loss would be more like an expense.
Okay.
You take it as depreciation.
Yeah, not loss. I'm sorry.
When you're taking it, so when you take it as an expense, it means you spent the money and it was gone.
Let's say the car, because that's a depreciation.
A truck. Okay. Let's give it a truck. So let's say you get a truck.
For your business.
For your business. And hypothetically, you really did a bad move and you just wrote it off as an expense, right? I made $100,000, spent 60 grand on a truck. I only have 40 total income and I wrote it off as an expense. Did not do it the proper way. And let's make believe you never get caught, right? You never get in trouble by the IRS. So let's leave getting in trouble out of the picture. Let's focus on loans. They're going to say, well, you only made 40 grand. So I'm sorry, you don't make enough money to qualify for this loan. And then you're like, but no, I actually made 100 grand, but I bought this truck. And they're like, well, sorry, the way you did your taxes, make sure like you only made 40 grand. When you buy a truck or any type of asset for your business, it does not lower your income. It still shows your income as 100 grand. And it doesn't show up as an expense. So it still shows 100 grand. What you then do is you add it as an asset over here on your balance sheet. And then what you do is you say, well, this asset's depreciating over time. I'm going to lower the cost of this. I'm going to lower the value of this asset because it's worth less over time. So that's called depreciation. The truck is older, it's worth less. There's a rule that if it's a heavy truck, right, 6,001 pounds, you can depreciate it all in 1 year instead of taking it over 5 years. So you can write it off all in 1 year because it's considered heavy. It's considered like heavy equipment. So now, and that's the same thing with a private jet. That's the same with like a boat. Same with like a, say, if there's a business purpose for an RV, you can write them all off 1 year. So $500,000 RV, write off 1 year.
What do you mean write off 1 year?
You can, that 400 grand, you can write it off. Bam, off my taxes in 1 year. So you can buy it and then save a ton of money on taxes because if you have a business purpose for that vehicle. So now let's just say for the truck, $60,000 truck, you put it on as an asset. You normally would depreciate it over, say, 5 years. That's going to be, what are you talking about, $12,000 a year? Well, instead, you choose the bonus depreciate, take it all in 1 year. You can do that. There's rules that allow that certain years. So right now you can. So now you have minus $60,000, not as an expense, but as depreciation of an asset. What that means is you will have a net $40,000. That's $40,000 of income that's taxable. Same result, same taxable result. But what's the difference to the bank? The bank in example 1 will show you only made $40,000 and you had 60 because of the $60,000 expense. That means you only made 40. In scenario 2, you made $100,000 and you did so well that you invested $60,000 in a truck to improve your business. So that's benefiting your business. It's good for your business. So now I made 100 grand in my business. I invested in $60,000 worth of assets and I depreciated the asset. You still made 100 grand. You still look good because you are growing a business that's investing in itself.
And now you're only paying $40,000 on taxes.
In both scenarios, you're only paying income tax on $40,000 of income.
I see. Okay.
But when you go for a loan, you go for an expansion, if you're going to be bought out, and someone's trying to buy out your company, that's going to be better if you do it with showing as
see what you're worth.
To show that you're doing that. Because this is the thing. If you wrote it all off, that means on your balance sheet you have no assets. So it's going to be even harder for you to get the best price possible on your sale. Because now they're going to look back at all these years and you just wrote off all these. You didn't write them off. You actually expensed all of these assets. They were like, wow, you barely made any money. You're like, what are you talking about? I made all this money all these years and then I bought all of these assets and look at all the assets I have here. Well, they'll be like, that's not what the taxes show. And the SBA is not going to give a loan on that. They're going to give a loan on the other option where you're adding them as an asset and then depreciating them because then you have all these assets that are on your books. So now because they're on your books, they're lendable, right? There's a value there. So now you'll be like, well, by doing taxes properly and the bookkeeping properly, that cost me an extra, let's say $1,000 a year. Because normally it's only like $1,000 or $2,000 extra a year. You're like, over 10 years, that's an extra $20,000. You're right. You're right.
So,
but every business that didn't listen to me, everyone.
You're not salty or anything.
No, I'm not salty. I'm winning. It sucks for them. Everyone has gotten 70% less than what they should have gotten on the sale of their business. Because the SBA is going to give you a loan. Small Business Administration is going to give you a loan. And guess what? They're a quasi-governmental agency. And guess what? They look at your taxes. So when a new person comes to buy your business, they're going to look at your taxes and say, wow, you can barely get a loan for this business because it sucks.
Oh, yeah.
So they can't sell it. They can't find a buyer because no buyer can get a loan because the biggest organization that offers loans on businesses is the SBA. And you basically removed the strength that you would have given them to be able to sell your business for a lot of money. I mean, and I'm not exaggerating when I'm saying 70%. It is literally 70% less that you're going to get for your business. So you gave up, you can only sell your business for 300 grand because the only person that's going to buy it is a person that's a cash buyer. You're not going to be able to get the good buyers that are going to say, okay, I'll pay $1 million for it, and the SBA will give me a loan at 90 cents on the dollar, so I don't have to put up $100,000. SBA comes up with $900,000, and now you're like, dang, that extra $20,000 that actually made it easier for me to get a home loan, that actually made it easier for me to sell my business and make that extra $700,000 of profit. All of that was because I made smart financial decisions, and a lot of that comes from your smart financial professional that you're getting advice from. I don't expect you to know everything, but how are we going to win? By getting good professionals, good coaches to guide us on smart decisions to help us benefit long term.
So someone asked, how do you find someone good to do your taxes?
Find out who's winning, who's a winner, and who's ethical. So find out who's an ethical winner and ask them, who do you use and where do you get your financial advice from? Because not always the tax preparer is the same person that gives you financial advice. It's not always a consultant. So my firm does tax preparation, does bookkeeping, does payroll, and does consulting as well. The consulting arm is separate from the tax arm. So.
And are you still offering your book if we do taxes with your company? What does that mean?
My
your
book.
You're still offering. Oh, sorry, they corrected themselves. Your course.
So
if they do taxes with you.
Do they get my course? No. So that's if you do a mortgage.
Okay.
So if you get a mortgage with me, you get the course price. So if you buy the course, I think the course is like $500, $400. I don't remember how much it is. And if you do a mortgage with me, you get the $400 or $500 off of your mortgage.
I see.
Or if you go mortgage with me, you get the course for free. Either way, right? Now, it would be smart if you buy the course, because if you buy the course, you're going to do your taxes better, and you're going to be easy. It's going to be faster for you to qualify for a mortgage. It'll be faster for you to get more rental properties. The course is Foundations of Personal Finance, how I got to 23 units by the age of 23. So that is probably a good thing for you to invest in upfront. This way you can get to that faster. It'll be faster for you to get a mortgage.
If you're a small business or if you're a business, can you use that as a write-off?
Yes, you can. Because if you're using the course to better improve on your tax and bookkeeping and investing in your business, then that is a deductible expense. And if you come out to meet me in person to get business advice to improve your business, your flight, your hotel, your meals, all of that it is possible to be tax deductible.
We have a person who wants to go live real quick.
Cool.
I'm assuming it's
we got 5 more minutes, and then we're gonna wrap it up.
Oh,
There
she is.
There she is.
Can't hear you. Let me.
You have to unplug.
Yeah, probably.
Hello.
Hey, are you there?
Do you have a tax question?
I'm just gonna exit out. I don't know what's going on. Okay.
Because you were exiting out of the.
Oh, cancel. Oh, I ended the live. Right?
Oopsie, you did. Yeah.
Oh well. Okay, so let's just close here.
Wow, 5 minutes was so fast. Time flies when you're having fun, guys.
Let's do a speed question real quick.
All right.
There's just 3 speed questions.
Oof.
First one here is: should I worry about an old house in the area of having lead-based paint? If so, should I remove it, paint over it?
So lead-based paint is very common for any property that was built prior to like 1980. And lead-based paint will not have a problem as long as you don't eat the paint. So you can paint over it.
Breathe in it?
Yeah, just paint over it. It'll be fine. It'll be sealed into the wall. Same thing with asbestos. Asbestos will only be a problem if you disturb it, rip it out, and things like that. But if you paint over it, it won't. Yes, really.
Are you sure? Well, that's
115% sure. Yes.
You also own a construction company.
Yeah. So the rule is you only have to get a hazmat team if you rip out the asbestos shingles or asbestos insulation.
Or the sink. Wait, is asbestos black mold?
No, man. No.
Clearly, I'm
No.
not real estate expert.
Asbestos is a product that was used in most construction material items, and it actually was a very good insulator. So a lot of our insulation, a lot of our products have asbestos in it because it does an amazing job of insulation. FYI, most fire department equipment, the insulation equipment, is made out of asbestos because it's still one of the best insulating material out there. So yeah, that's why also I have a feeling why do most firefighters, even after they quit, they die by like 60 years old. Could be that once they're in a fire, obviously does an amazing job to keep the fire off of them.
Yeah, but
right?
then it gets disturbed in the fire.
Disturbed in the fire, so it could release some type of chemical and affect their
not a fact, guys.
body. Not a fact, just speculation.
All right, and then last question: what if we refi with you? I bought the course and need to refi.
So then that means we'll give you the credit of the course cost in your refi as a lender's credit.
And one last extra. This promises the last one. What is the minimum we need in order to invest with Corsia Pascal?
So it depends on the investment. We have a crypto mining one, crypto investment one. The crypto mining, I think, is like 50,000. I think we're 25,000.
And
I don't
all of
remember.
these investments are tax smart investments.
They're tax smart investments. So they have the ability to get tax credits and tax incentives. If you have your smart tax professional do it right. And then we have the real estate investment one, and that's about 100,000. There is some exceptions where we can sometimes go less, but on average, most of our investors are investing in like $500,000 and stuff like that. So if someone comes in and invests $500,000 or say 450,000 and the average investment is 100,000, we'll sometimes have like a $50,000 gap where we can have someone else fill the $50,000 gap, even though the minimum is $100,000. Okay. So it is not cut and dry. It really is a case by case scenario and
just reach out
relationship based also, because if you don't have $1 million net worth, you cannot invest with us. You have to have at least $1 million net worth or make $200,000 a year as an individual, $300,000 a year as a couple. The exception to that is if you have a pre-existing relationship with us. So if we do your mortgage, if we do your home insurance, if you do your taxes, we already know you. So that pre-existing relationship gives you the opportunity to possibly invest with us, and you don't need the $1 million or the accredited investor title.
Okay, awesome. Those are all great questions and answers from everyone. Thank you guys for joining us. This will be shown again live playback, so you can watch it over again on YouTube.
Live playback on YouTube, yeah.
When you want to learn more about or write notes, because he was going headstrong with all that education.
This is how fast I talk. This is not 2x. If you're thinking, wow, did I put it on 2x? No. Try to listen to me on 2x. I'll be like, blah, 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 blah.
You'll be rapping like Lil Wayne. Okay, so bye guys. Have a great night, and we'll see you 2 weeks from now.